Hi, Steve Sosnick here with today's Interactive Brokers Midday Market Update for Tuesday. May the 4th be with you, 2021. You can see I'm not in my usual spot. We're trying something a little bit different in terms of work from home today. It's actually not my home, but we try something a little different. Markets are off to kind of a poor start this morning. I don't make too much of it. I wouldn't be too concerned about a one-day drop of 0.75% or 1% here and there. It happens. You get stuff like this in bull markets, which is still what we are in. Now, to be fair, the market reaction to earnings has been lackluster, which makes you kind of wonder what the market needs to see next. And that's definitely something that we should be thinking about now. Is the market sort of outkicked the coverage in many ways in terms of expectations? The other thing is, obviously there's some geopolitical worries out there today that had been very much in the background, but had gotten some reporting about, some increased tensions between China and Taiwan. That's definitely something a little bit out of the ordinary, and that's certainly a reason for the decline today. But otherwise, we've seen stocks beat handily and the market yawn. We've seen stocks get kind of beaten up after they've missed. That's not really a good sign. And remember something else we've been talking about. What I'm going to say here is not the mechanical sell in May and go away, although it definitely has been something to keep an eye on for May for some time. A lot of investors, particularly many of those who are new to the markets, will be surprised by their tax bills, or if they're not already. Taxes, remember, this year are due in May, not in April. And if you've been fully invested and making plenty of money on short-term investments, and God bless you if you have, but one of the things that I think people are a little bit caught by surprise this year, again, particularly newer investors, is how much money they may owe. And if you're fully invested and owe taxes, where's that money going to come from? Your investments. And so that, I think, actually puts a bit of a downer on the cash inflows that we've seen into the equity markets. Another thing that I think is not particularly good for the markets, great for the economy, but not good for the markets. And remember, what's good for the economy is not always what's good for the markets in the short term. And that is that people are getting vaccinated. They're going to visit family and friends. As you can see in the background, I'm visiting family right now. Now that we're fully vaccinated, we decided to go visit my mother. My wife decided to go have us visit my mother-in-law. We hadn't seen her in ages. And this required getting on a plane and spending some money and doing stuff like that. And I think money is going to be coming out of the market to do that. I think a lot of people have their savings pretty much fully invested in markets or heavily invested in markets. They're going to be spending some of that money on goods, services, experiences, and that actually, I think, can become a bit of a negative from a cash flow point of view for the markets. I'm not going to get too stressed out over it right now. That doesn't mean we're going to crash imminently because of it, but what had been a tailwind in terms of money flowing in quite steadily into the market is now not necessarily a headwind and might actually be a tailwind. That's the thing to be thinking about in terms of the activity that we're likely to see in the days and weeks coming forward. How we deal with that, how much money comes out for taxes, how much money may come out for just people living their lives again, we'll have to see. But in the meantime, I think that, throw a geopolitical headline on top of that setup, and you have what we're seeing at least so far this morning. Have a great day, everybody. Bye-bye.